report on this. All right, guys, let's get started today. As usual, my name is Sheen Trades. I'm a co-founder of Traderlink. We have Gio here today. Maybe he'll say something, maybe he won't. Most likely he won't. But today's lesson is going to be all about gamma. You know, for those who have been here, it's going to basically be like all of the first week stuff from the previous classes combined in one. So just to consolidate and make it a little bit, get all the information on and in one video. So to start off, the basics of GEX, right? So GEX. Starters, for those who aren't taking notes, fucking take some notes. All right. So I don't have to keep repeating myself over and over again. Right. Two environments, right? Two environments. What are they? One is positive, right? The other one is negative. What do each mean? A positive environment means dealers sell the rips and buy the dips. Okay, I got to make sure I'm saying that correctly. So what does it mean? What does that mean for the market? More liquidity, less volatility, right? Does that make sense? Make sure you guys are writing this down. I'm not gonna, this is something that you should know by now. Sell rips and buy dips, right? Something that should always be known in the environment that you're in is this information. So as for negative, right? As for the second environment, what does that mean? They have less liquidity and more volatility. Less liquidity and more vol, right? More volatility. What does this mean? They sell the dips. Oh, buy rips and sell dips, right? Everyone get that so far? Very simple. Make sure you write this stuff down. It's very important in understanding the type of price action you can potentially see during the day. Good for now. Does anyone need to screenshot this before I erase it all? Not erasing in 5 seconds. I feel like everyone knows this by now. This is like the first thing I go into when starting teaching someone about gamma. So, okay. Next thing. What's liquidity? I know you know, but I'm sure you're just not on doing. Okay. As for the basics of GEX, right? Basics. Right. Let's get into it. What do positive bars mean? Positive bars. What does a positive bar mean? A positive bar essentially just means support or resistance. Right? So how can it be used? When is it support? When is it resistance? This just depends on the approach, guys. So spot price is right here, spot, right? And you have some bars up here, right? You have some bars up here, smaller bars, right? Something like this. And then you also have positive bars down here, right? These are going to be the resistance, and these are going to be your support. Just depends on the approach, guys. The next thing to go into is what to pay closer attention to during these days. In my opinion, it's just going to be the most important ones are going to be the highest strikes of exposure. Why do we pay attention to the highest strikes of exposure? Because at that point, the dealers are hedging more, right? I hope that makes sense. They have more exposure at a certain level, so then they have to hedge more due to that exposure, right? So the next thing is, what are negative bars, right? Basics again, right? Negative bars. What do they act like? They act like accelerants. I always forget how to spell this. Is it 2 R's? Is it 2 C's? Don't wash me on my spelling. They act like accelerants for what? For fluid movement. For fluid movement. Right? I hope that makes sense. Why do they act like accelerants for fluid movements? Oh, I should touch on another thing before I get into this. But okay, so we'll use the space here, right? Positive bars. Why do they act like support and resistance when they're like this, right? Spot price. So as spot price pushes up, right? What happens when you get to a positive bar? Dealers are going to be selling against the move, right? If it's resistance, if it's spot positive above spot, what happens? They are going to sell against the move. So then this will act like resistance, correct? And when you get down to this positive bar, they're going to be buying against the move, right? So no matter what, as you get to a positive bar, dealers are going to be playing against the move and against the price action. Meaning if we're falling down, dealers are going to buy. So as you get to a positive bar below spot, this is a buy for the dealers, right? And as you get up to the one to upper sell or upper positive bar is a sell for dealers. So now that that's done, we can get into the next the negative ones. Hopefully that all makes sense. Let me erase all this garbage. Can I make this eraser bigger? Yes, I can. 1 second, almost done. Okay. Right. The next thing about negative bars, as we were talking about, negative bars, they act like accelerants for fluid movements. Why? Because let's say you have spot price here, and you have a negative bar here, and you have a negative bar here, right? There's one important thing to this that I always, always, always talk about, right? In the sense of when you get to negative exposure and you want to see a break through it, right? Dealers are going, once you get up here, right? Dealers are going to buy with the move, right? Dealers are going to start buying through this negative exposure, meaning it can go up to here. But the key part that I always, always talk about is, are dealers positioning further ahead or further below, right? As we push up to here, are the bars all still the same in terms of height, I guess exposure, right? Unless you see something bigger here, let's say you break through this one finally, right? If you don't see anything grow, the odds that we push higher are going to be slim, right? We talked about it. I think we had an example sometime. It was yesterday. What am I talking about? There was an example yesterday. Wait a minute. Flip to SPX. What? Why didn't it load? Oh, that's futures. Okay. If I remember correctly, we had, I feel like LeBron James in the tape. I remember everything. 25 negative, 30 negative. And then as we started to push up, we had a 50 split, right? So split divergence. This one is negative GEX. This is negative GEX, right? Same thing. So as soon as we came through, this is a perfect example. I'm not going to pull it up pull up the information. I feel like you guys all remember what it looked like yesterday. So what happened exactly? Right? We came down, broke below 50. It was a split wall. And what did it act like? It acted like resistance, right? And we came down even more, went right through that negative GEX at 30.25. But once again, there were no bigger pickups, not even the split GEX there was no split GEX at 4,900, right? There was incremental amounts. But we always talk about what's called I guess those V-shaped recoveries per se, right? There was negative GEX here. So it, once again, depending on the approach that you're coming from, this is very important, right? Dealers sold through it, but if price action starts retracing back up, dealers are going to buy through these levels. Look at this big buy, number one, right through that 25, right? Buy through these levels. You know, we had a little bit of chop, but and we came back and went straight up through that level. So just keep that in mind, right? And as we were pushing up, right, as we were pushing up here, this 50 GEX started, the split divergence started to pick up, right? Does that make sense? Hopefully that makes sense. I've been keeping up with the chat, so. But we talked about this in class, and we talked about this on Monday after what happened. We called the potential V-shaped recovery, and this was the exact reason as to why, right? That's a perfect example. You have a V-shape, or you have a straight down through the negative GEX, right? And then potential recovery through said next negative GEX levels is just because dealers are assisting the move back up, right? And as we're pushing up, same thing applies to what I said 5-10 minutes ago, right? You want to see some sort of pickup above, because then you can see a potential wall. And what happened there? We ran up to 50, instantly rejected. You started using that as resistance, right? Yeah, if you had, this is why everyone always asks, like, why do you keep 6 gamma up? I could honestly lower it to 4 by getting rid of skew adjusted, because I'll be honest, I don't really use it all that often. But I have 4 because I don't want to have to flip back and forth between net and split. So I just keep 2 of each, 2 of raw, 2 of de-adjusted, right? That's exactly why. So this is a perfect example of acceleration through negative GEX. That's, I think about it. You know, I've done so many of these classes already. I kind of know exactly what's important. So I'm kind of getting to the point where these classes are very short. So do you guys have any questions? Right? It's as simple as using, once again, I always talk about ways you can implement GEX on into your day-to-day stuff, right? It's just mark your GEX levels, negative GEX, big GEX walls, right? Mark your positive GEX, see what happens. As you break through certain levels, you want to refer back to the chart or the data and be like, okay, we've broken through everything. Are there any pickups, right? So step 1 is, I guess we'll put it into steps. So step 1, right? Mark your chart. Let's say you're at a GEX level. Step 2, at GEX level. Right? The next thing is to do is, let's say you break below, right? Break above or below. We'll just say break. The next thing to do is any pickups. If there are no pickups, dealers are most likely not interested in letting the stock run or go lower. What's a GEX divergence? So imagine like this. We'll take the colors too. So you have a, pretend this is the line, right? We'll flip to green. You have something like this, and let's say 0.2, right? Then we flip to red. And then you have something like this. That's also 0.2. Well, negative 0.2. Then on a split chart, what it'll look like is something like this, right? Up your line, and then we get the sign on blue, and it'll look something like this, right? It'll look like that. So let's just call it 0.21. So then this is actually 0.01. Does that make sense? This is what it'll essentially look like. Okay, I need to enlarge this chat. Yeah, split divergence is literally, I treat it as support and resistance. Personally, just from my experience, that's what I've seen it act like. And we have a perfect example of that like yesterday. You guys can go back in the Discord, scroll for the screenshots, what it looks like right here. Thank you, Liquidos. Those screenshots are perfect. I will copy image, paste it on here. We'll get rid of these. So what Liquidos is pointing out right here. This is the important one, right? Where it looks like there's some form of interest at this 50 level, but on the chart here, it doesn't look like much. Shows something very small. That is a split divergence. Can you show how I prepare in the morning? I wake up at 5 a.m. I get to my desk by 6:30. I pop us in and I look at the charts. And I'm absolutely dialed the fuck in, baby. Fuck. How can you determine general direction with data? Robert Payne, good question. How can we determine general direction from the data? I.e., if spot is between two large GEX bars, how do I know if it will go up or down or vice versa? So, to answer that question, is you just wait. Let it pick a side, and then if it's a positive bar, you can long it or you can wait for a potential bounce. If it's a negative bar below, it's probably gonna flush through. Then you wait to see if there are any pickups. If there are no pickups, then you can wait to go long and it'll accelerate right back through. So that's why that's why I have split or two charts up. It's literally just so I don't have to flip back and forth and I won't miss anything. I can just leave it there. With a GEX flip, it's also used, yes, GEX flip. Ooh, that's a good one to talk about. GEX flips, right? Can be used as support or resistance. So let's say we have this chart here. Spot price is right here. And then we'll flip to a blue color, right? We have a bar here, bar here, bar here, bar here, bar here, bar here. And then we have a bar here, and then it gets negative right here. I always mark GEX flips. You guys have seen it on stream. Why? Because this flip point, right? Flip point, Flipperton, right? Why is the GEX Flipperton important? And why does it act like support and resistance? At that point, that's just something we've noticed. Geo maybe has a more in-depth answer, but as for me, I'm just telling you what the data says. I don't have the specific mechanic behind it, but GEX flip always acts like support or resistance. S/R. Perfect. Liquidos gave you an answer. Dealers may not want to flip their portfolios from negative gamma to positive gamma or vice versa. Can I show with a screenshot? I mean, let's see. There was one from today. I think it was literally 49.50 was the GEX wall today. There you go. Or the GEX flip, sorry. And we'll delete this. Boom. What does this look like? A flip, right? Exactly as we drew it earlier. Flip at 49.50, right? GEX flip. There you go. Yeah, you could mark the 45.50 zone as well, because then as soon as you get to that point, I know Fatty always looks at the half mark, so like 47.5 in this case. Forty-two and a half was line in the sand this morning. Huh. Wonder. Huh. How does VIX play into your decision? VIX has to do with Vana. Personally, that's just what I use it for. The basic standard is usually SPX, VIX, right? If SPX go uppy, VIX usually go downy. But if they're that's not always the case. There comes a day where Vana is important. Basically, if Vana tells you that, let's say we have negative Vana below spot, right? If IV increases, then it'll become a magnet. But we'll get into that on Thursday. That's not something for today. Yeah, I watch raw gamma, I watch delta adjusted gamma, and I watch both split and net for that. You guys can see my dashboard right here. This is it. They're all labeled delta adjusted, skew adjusted, raw, right, with no tag. And this is split, net, all below, right? Like this, like this. That's pretty much it. That's my setup. And then if you scroll down, you have Apex AI, you have on exposure, you have charm exposure, speed exposure, delta exposure, DDOI, footprint, and unusual options. Yeah, 145 broke. Shit. Fatty's right on that. 145 snapped. 45 right here. Went right through it. That was the line in the sand. That's also, wait, is this today? Yeah, that's also very interesting to see. That was the line in the sand right here. Used the flip point as resistance. Above 50, obviously, we full sent it. That was towards the end of the day. I'm correct right now. ES is running. Yeah. Just ran for 7 points. And Q with a big pop. Gamma flip changes through the day. It can change through the day. It doesn't change often, but it can. Yeah, I wish it ran earlier today. Would have been nice, but it is what it is. But yeah, I want to keep the class short and simple, keep it to just the information. So with that being said, I'm going to end the recording and then we can keep talking.